you've lost faith in humanity, clap your hands. If you've lost faith in humanity, clap your hands. If you've lost faith in humanity, and this is your villain origin story, if you've lost faith in humanity, clap your hands.
Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Oh my gosh. I'm dying. Oh, I haven't laughed like that in a long time. Goodness me. All right. All right. Hello and welcome to Camel Finance. I'm your boy Camel. And today I wanted to talk about cycle theory, left translation, just cycle theory in general, because I'm still getting questions about this. And I think, largely speaking, it's because people don't really understand cycles. So we're going to actually touch on cycle theory today. I'm just going to outline 2 or 3 core concepts, and then we'll apply that to the Bitcoin chart. And we're going to answer a few questions about whether or not it's still possible, what it implies going forward. And the reason for that is quite simple. Number one, we have reached late November now, which is halfway through the cycle, which is the midpoint of the cycle. So if you're not familiar with cycle theory, you're about to understand why that's so significant. And the second reason is, I believe gold is showing us a fractalization of textbook cycle theory. And so I wanted to show you a real world live example of what gold is displaying, which is, of course, like I said, textbook cycle theory, and show you what the implications of that are pertaining to Bitcoin. So first of all, there's a whole heap of people that are new to this channel and new to cycles. So I think it would be prudent to start with first principles here. So let's start with the definition here. This is the PDF I wrote on cycles. The first thing we need to understand is the midpoint, okay? The midpoint is found by measuring any given cycle from low to low and dividing it by 2. The midpoint is the halfway mark of any given cycle, which of course means, let me do some scribbling, if we have a cycle low here and another cycle low here, and we observe that price trades into a cycle low, bounces up before coming down into the next expected cycle low and bouncing, the exact halfway point between these 2 cycles right in the middle is the midpoint. So then how do we define translation? Cycle translation is simply an observation of where the peak forms in a cycle relative to the midpoint. A cycle is classified as left translated if the top for a given cycle forms to the left-hand side of the midpoint. Meaning, again, if we have our 2 cycle lows and we split the thing right down the middle perfectly in half, a cycle that is observed to form a cycle low top to the left-hand side of that halfway point and spend the remainder of the cycle in a decline is qualified as left translated. We can also observe 2 other types of translation. Middle translated, which is where the cycle peak forms exactly at the halfway point. That would look something like this. Cycle low, peak exactly in the middle of the cycle, and then we spend the rest of the cycle declining into a cycle low. And the third observation we can make pertaining to the translation of a cycle is a right translated cycle, which of course is classified as the top forming to the right hand side of the midpoint. So once more, we form a cycle low, we rally up, okay, the peak for the given cycle forms to the right hand side of the halfway point, and we spend the rest of the time declining into a cycle low. So that is how we define translation. That's all it is, an observation of where the top for any given cycle forms relative to the middle. The next thing I want to talk about is fractalization and chaining together daily cycles to give us larger order degree cycles. So in the red, we've got weekly cycle lows, and you'll notice by chaining together 1, 2, 3, 4 daily cycles, that gives us a larger order degree cycle. In this case, if we chain 4 daily cycles together, we get 1 larger weekly cycle. Now, this same fractalization occurs on all time frames. So whether these white arrows are daily cycles or hourly cycles or weekly cycles, the concept is still the same. When we chain together 4 cycles of any time frame, what we find is chaining together 4 of these cycles gives us the larger order degree cycle. And the last piece of cycle theory that I think is important to understand before we move on to the charts is the implications for a bearish or a bullish larger order degree cycle. So here is an example of a bullish larger order degree cycle. This is a weekly bullish cycle. And what you will notice is we go 1 right translated, 2 right translated, 3 right translated, and then the 4th one is expected more often than not to left translate. This would be the textbook example of a larger order degree cycle comprised of 4 smaller degree cycles. And again, notice that when we are in a bullish structure and an uptrend, we go right translated, right translated, right translated, left translated on the 4th one. If we are going to have a bearish structure, a bearish larger order degree cycle, then we would expect the first cycle to right translate, and then the following 3 cycles to left translate and fail, left translate and fail, left translate and fail. This is how we chain together 4 cycles to give a bearish structure. So that's all I'm going to talk about for the cycle theory now. We know how to define translation is merely an observation of where the peak forms relative to the halfway point. We have learnt that chaining together 4 cycles of any time frame gives you 1 larger order degree cycle. And we have learnt that if the structure is bullish over the longer term cycles, what we will see is typically 3 rights followed by a left translation. And of course, if the structure is long time frame bearish, what we will see is a right translation first, followed by left translation and fail, left translation, fail, left translation and fail. So if you are interested in learning how cycle theory works, everything I know about cycle theory is in this PDF, and you can download it from the description or the pinned comment with a Black Friday discount code. So now let's do some worked examples, okay? Right here, we have got Bitcoin on the monthly time frame. Notice 4-year cycle low, 4-year cycle low, 4-year cycle low, 4-year cycle low. Next one is expected late 2026. Now, if we just simply look at this and make an objective observation, we observe Bitcoin put in a right translated cycle with the yellow vertical bars denoting the halfway point in a cycle. The following 4-year cycle was again right translated, peak to the right hand side of the yellow halfway marker, and then bear market decline for about 12 months. The 3rd cycle for Bitcoin, indeed right translated, by putting a peak in after the halfway point denoted in yellow and then spending 12 months in a bear market. And thus, cycle theory told us on a balance of probabilities, the most probable outcome for this cycle was to see a left translation and an extended bear market decline to give a larger order degree cycle. This is where the whole idea from left translation comes from. I see a lot of people misusing the term. I see a lot of people throwing around other terms for it, like left leaning cycle or early cycle or shortened cycle. But the reality is, those people just don't have access to cycle trading knowledge, okay? They just don't understand how cycle theory works. And now that I've shared this all with you, you can see that there's really nothing to this idea other than the textbook bullish structure is if we see 3 right translations, the 4th one is expected to left translate. Now, as ever, it's not a holy grail. It's not got 100% accuracy, as with any trading edge or any trading system. From time to time, things don't play out flawlessly as per the textbook examples, but the whole point of an edge is if you bet on the edge, you will be right far more often than you'll be wrong. So that is where this whole left translated cycle idea is derived from. And as I've shown a number of times before, this is a printed out chart of Bitcoin that I've had pinned on a whiteboard in my office since all the way back when Bitcoin was trading sub 10K. And you can see the expectation even back then, purely based on cycle theory alone, told me to expect a right translated top followed by a left translated cycle. So there's really nothing out of the ordinary pertaining to these expectations. But now, of course, we've got to address a couple of things. Since we are now in November, and November, as you can see right here, is the halfway point of this cycle, is left translation still possible? And of course, you should know the answer by now is no. No, it is not. If we were to top this month, then we would be observing a mid-translated cycle on our way down to that next 4-year cycle low. We could only have observed a left-translated cycle if the peak for this cycle fell to the left-hand side of November. So that's one of the reasons I wanted to bring this up today. I see a lot of people still asking, is it on the table? Is it invalidated, etc., etc. And as you know now, it cannot possibly occur since we are now in November, which is the halfway point in the cycle. Any top that is observed this month will be qualified and observed to be mid-translated. Any all-time high that is observed in the month of December onwards will be observed to be right translated. So of course the next question is, what does this imply going forward? What can we learn based on cycle theory? And I also wanted to show you gold because gold is illustrating what happens when the 4th cycle does not left translate as expected. So from here, what we can observe is one of 2 things. We can observe either a mid-translated cycle or a slightly right-translated cycle that still gives us an extended bear market decline. Okay, now from a cycle perspective, The whole reason the fourth cycle is expected to left translate and have an extended declining period is because it needs to flush and reset the sentiment on the larger order degree cycles. So from a cycle perspective, from a health perspective, if this market is to top anywhere between November and let's say February or March, and then spend the rest of the cycle in an extended bear market decline, from a cycle perspective, it will have still done its job, which is to have a huge run up and then an extended walk down to fully reset and flush the sentiment, reset the cycle. And if we are to observe this from a cycle perspective, this is the most healthy outcome. And the reason I say that is once we've flushed out all of the leverage, once we have flushed out and reset all of the sentiment, we then get to expect an entire higher order degree cycle, which for Bitcoin appears to be 16 years, all over again from here. And if that's true, if we can have an earlier top and walk down into a cycle low, then we will have fully reset the larger order degree 16-year cycle, and the gains made from there on would be akin to this section. All of this would speak to perhaps some kind of QE bomb that shows up, record amounts of printing and stimulus that shows up around that 4-year cycle low. This would also fit with that whole S-curve of adoption, and all of this would just be normal and to be expected cycle things. So this is still what I am hoping to see, because based on my knowledge of cycles, like I said, that gives us the best fighting chance of having the most bullish outcome thereafter. But there is, of course, a second scenario on the table, and that scenario is that we are going to do what Bitcoin has always done in the prior cycles. We are going to move this up to October-ish of 2025 and then just spend a mere 12 months in a bear market decline into that 4-year cycle low. And whilst I see a lot of people championing this as an idea and they really want to see this, whilst this would give us a higher top and an easier to identify exit signal, whilst this would be much easier to deal with in terms of selling the top, the implications from a cycle perspective are actually quite sinister. And to show you what I mean about this, we need to look at gold. So here's the gold chart, okay? Notice, number one, weekly cycle low denoted in blue, weekly cycle low upcoming. Now, what did we observe? We observed 1 right translated cycle on the daily time frame, 2 right translations, 3 right translations, 4 right translations. But the issue with seeing the 4th cycle right translate is it then implies that the next cycle must left translate and fail in order to truly reset the larger order degree time frame. This same principle has enabled me to call this lower high bounce in gold, expect that rollover into the weekly cycle low time frame denoted by this window in red. And you can also notice that we form a lower high here relative to this high. So according to cycle theory, if we do not left translate in cycle 4, it is expected that the following cycle 5 will see the true reset of sentiment and the true flush. So what does that imply to Bitcoin? Well, that implies, of course, if we are going to right translate here, just like we always do, and then have that bear market decline into the 4-year cycle low, the following cycle may have to left translate, form a lower high, and bleed for a long, long time. Now, this does not make any sense to me at all. This would imply something has to go severely wrong with Bitcoin. If this is true, and of course this is just a textbook expectation of cycle theory, but if this is true, then it would have to either not respond properly to QE, it would probably have to have some kind of regulatory issues stepping in here and preventing people, maybe they switch off the off ramps, we don't know. There's also another scenario where we get here and we left translate to a new high and then correct the move. Okay, that would be an incredibly parabolic up and down type move, and then we spend almost 3+ years in a consolidation cycle. We could of course have some kind of double top that left translates, okay, down into a cycle low. But the true implications of this is all of the people that don't understand cycle theory are championing this time's not different, everything's going to be the same, another 12 months of bull and then 12 months of bear market. And the reality is, from a cycle perspective, gold is showing us that this is not something we should be rooting for. Now, I guess it's always possible Bitcoin is a completely different beast. I guess it's always possible that Bitcoin is going to do Bitcoin things and it's going to throw some wonky behavior and we just can't see that at the moment. But gold is showing us exactly what happens when we get 3 right translations and the 4th cycle does not left translate as expected. It shows us what comes next, okay, that rollover, the early top, the left translation, and down into an undercut of the low. So coming back to what does this scenario imply going forward, I think personally, based on cycles, it implies we should be hoping to see an earlier top and extended bear market decline so that we can reset the sentiment in the larger order degree 16-year cycle and expect to go full bore parabolic thereafter. And of course, it's equally possible that what we get is a big right translated cycle, tops somewhere around October of 2025, a 12-month bear market decline. But the issue with that is, if that is what we observe, then on a balance of probabilities, the most probabilistic outcome thereafter is a very, very short cycle to the top. And we may even see a lower high. If we were to do something like this, to me, it implies Bitcoin is in a world of trouble and a world of pain. So I really don't want to see that. Like I said, it is entirely possible that we just go left translated to some huge number and then it walks down slowly over 3 years. But I do still maintain, in the interest of not having to see a repeat of what gold is showing us, wherein cycle 5 left translates and fails, I really do think we should be championing seeing an early top and therefore more than 12 months that we're used to seeing in that bear market decline. So there's not really much else to say, right? That's all there is to it. I hope you now understand how we define and observe cycle translation. I hope you understand the implications of chaining together the cycles to give the larger time frame cycles. As ever, we'll stay open to all possible outcomes. We'll see if we can indeed continue to stay long and strong until the market tops. But I think if this doesn't concern you a little bit, then perhaps maybe now it will. So again, I still maintain the most healthy thing is an earlier than expected top and extended bear market. But we're going to find out one day at a time, as always. For now, I've seen this dozens of times, so most of the time we do get the 3 rights and a left, and if we don't, then we expect it in cycle 5. Like I said, that's how we were able to call this here. I just hope that this is not going to be one of those calls I'm forced to make based on my cycle system by the time we get to Bitcoin's 5th 4-year cycle. If you want to download that PDF, like I said, there's a link in the pinned comment and description. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us north.